Good morning, everyone. Good morning, guys. I hope the audio and the video is clear to everyone. Can you please confirm the audio and the video is clear to everyone? Please confirm, all of you. Wonderful, wonderful. Now, once we start the chapter of interpretation of financial statements, first of all, let's understand the type of questions that can come up in the exam. Okay, so what I've done is I've done the analysis of the past few papers and also the technical articles, and there are around 6 type of questions that can come in the exam. Okay, so first of all, let's understand the type of questions that can come in the exam, so that will make our study strategy accordingly. Okay, so now type 1. Type 1 is compared two entities year on year. I've already written this one. Yes, compare one entity year on year, meaning thereby Reliance Industries on 31st March 2022 versus 31st March 2021, means same company, but for two different years we are comparing whether the company has outperformed previous year or underperformed previous year. Okay, now type 2 is compare with industry or sector, meaning thereby you are comparing that whether Unilever has outperformed or underperformed the FMCG sector. Okay, FMCG sector. Now type 3 is compare two companies for same year, meaning thereby you are comparing Wipro with Infosys. Okay, for 31st March 2022 you are comparing the two companies for the same year. Okay, now type number 4. Okay, acquisition or disposal during the year, means acquisition of a subsidiary during the year or disposal of a subsidiary during the year. Type number 5 is cash flow, interpretation of cash flow statements. Interpretation of cash flow statements. Now these are the 5 type of questions that has ideally been asked in the past few attempts of ACCA FR pertaining to interpretation of the financial statements. Now we have to what happens is when you go through the examiner report, now the examining team recommends a question from each type. Examining team recommends a question from each type. Okay, now what I have done for you guys is I have taken up all the questions and segregated for each type. Okay, so what I will do is I will give you the example for each of these questions. Okay, basically for type 1 which question you have to solve, for type 2 which question you have to solve, for type 3 which question you have to solve. Okay, now what you have to do is, you have to solve a bare minimum these questions. Okay, you have to ensure that you have solved these questions. Okay, and all of these questions you have to solve it. Okay, that's a bare minimum. Okay, and I can guarantee if you solve these questions you are not getting anything extra in the exam. Okay, so you have to do these things. Now I will give you the example for this one. Is the question that you have to solve is just Mover company, and this question was asked in September, December 2017. And for your information, I will tell you that this question I have already discussed in one of my revision series. The link for this video, the link for this classes is, or it will be given in the description box. Okay, now type to compare with industry or sector. This question is Bun company. This question was asked in September, December 2019, and this question will be discussing today. Okay, now type 3 is compare two company for the same year. This is Fungent. March, June. This question was asked in March, June 2017. Okay, you can also find this question available in BPP exam kit and Kaplan exam kit. Both exam kit this question is available. Okay, so you can find it there as well. Now type 4. In type 4, the examining team recommends multiple questions. It recommends for acquisition related question. It recommends Duke company and Grigori company. Okay, this question was asked in September, December 2018, and Grigori company was asked in September, December 2016. Now for disposal, the question suggests Perkins and Perlow. It was asked in March, June 2018, and this was asked in March, June 2019. Okay, now for interpretation of cash flows, though the examining team doesn't recommend any question for this one, but I recommend you to solve Costner company. I recommend you to solve Costner company. Okay, now so see, understand, in our YouTube channel we already have a video on this one. We already have a video on this one. We already have a video on this one. We already have a video on type 4. Okay, that was also in the previous revision session we have conducted it off. Okay, and the link for that is also in the description box. Now, today we will be discussing type number 2, and type number 2 and type number 3 is more or less the same type number 2 or type number 3 is more or less the same type. Okay, so this is what this will serve the purpose. Now understand, before we move on to our further class, let me discuss the agenda for the today's session. So basically, understand, when it comes to interpretation of financial statements, what the examining team suggests that there are certain set of students who have performed wonderfully amazing, but there are certain set of students who performed really like it's below average level. Okay, they perform poorly. Now what's the reason for that? Okay, so what I am discussing is what is the study strategy for the interpretation of financial statements. Okay, so first of all in the today's class I will discuss the study strategy for interpretation chapter, okay, interpretation of FS. And I can guarantee guys, if you follow this study strategy, definitely you will find this chapter as the one of the most interesting chapter in the entire FR syllabus, okay. And you will see that, and you will realize that this is the easiest chapter in the entire FR syllabus. Now second point is you have to understand the technical articles, okay. Now third point, you have to understand basically the practice approach. Now this is what you have to do. Now we will discuss one by one, okay. Now study strategy for interpretation of financial statements, interpretation of financial statements, study strategy. Guys, understand, this chapter of interpretation of financial statements is not like the other chapters like non-current assets, leases, revenue, government grants, other chapters, okay. This is not like those chapters where you have a definite set of standard, you have to follow those rules and regulations and solve the question throughout. No, it is not like that. This chapter is little bit different, okay. And further, this chapter is also not like the preparation of a single entity financial statements or a group financial statements, okay. Why? Because there is a definite set of rules and regulations governing those preparation or those questions, but that is not the case in this chapter. This chapter does not have any definite set of rules or regulations or a format which you should follow to solve these questions. Rather, what is required is an analytical mind. What is required is analytical mind. Now definitely there will be a set of students who has a high level of analytical mind, and but there will be a set of students who does not have that level of analytical mind. So does that mean that the students who does not have that high level of analytical mind will not be able to score high marks in this? No, it is not the case. Definitely all of you can score amazing marks in this chapter, all of you, okay. But you have to follow this approach, all of you. First of all, what you have to do, understand the ratios. Understand the ratios. Now, what is the meaning of understand the ratios? So when I say understand the ratios, first of all, understand the formula. Okay, understand the logic. Logic means what's the meaning of logic? When I say logic means what is the use of this formula, what is the use of this ratio in an ideal practical world, how this ratio is interpreted. Just to give you an example, there is a gross profit, there is an operating profit, there is a net profit. How these three different profits are interpreted, understand it, and what is the difference between these three profitability ratios. See, all of them are profitability ratios, but what is the difference between them? The basic difference is gross profit says that whether this product is profitable or not. The operating profit margin says that whether this segment is profitable or not, and the net profit says whether this entire business is profitable or not, So you have to understand the difference between the ratios. Okay, you have to understand the difference between the ratios. Now it might be the case that the product is profitable, okay, but the segment as a whole is not profitable. To give you an example for that, let's suppose Unilever company now launches a biscuit, okay. Unilever company launches or ITC company launches a biscuit called a Sunfeast, okay. Now when ITC launches a biscuit, okay, the price for that is, let's suppose, $2, okay. The price for that is $2 per unit, okay, and the cost to make that product is, let's suppose, $0.75, okay, 75 cents. Now, so what is the profit, gross profit per unit? What is the gross profit per unit? $1.25, $1.25, right? Now that product is profitable, but now to manufacture that product there are certain fixed costs involved, and when we see from an entire business perspective, it is a loss making. So that's what is the difference between the gross profitability and the net profitability and the operating profitability. So what we have to understand is, rather than thinking from an accountant perspective, we have to start thinking from a business perspective. Okay, think like a director. Okay, think like a director. Think like that you own this company. You own this company. Okay, now what is the impact of this decision in the you can say critical success factors of the company, whether it be profitability, or it be, you can say, liquidity, or it can be solvency, it can be anything. But you have to understand that you have to think from a business perspective, not from an accounting perspective. I hope you are understanding these points. Is it clear, everyone, till here? Come on, guys, tell me. Understand the ratios and the logic and implications. Okay, of implications, that is of increase or decrease. Basically, why they increase and why they decrease in an ideal world. Why they increase and why they decrease in an ideal world. Just see, did I at any given point of time did I say that you have to by heart it? No, you have to understand it. You have to understand it. Do not try to mug up things. Do not try to mug up things. Try to understand the logic. It will already be fit in the mind. Okay, so do not try to mug up things, rather try to understand things. Now, once you have understood the ratios, second what you have to do is, okay, understand the mindset of examiner, which we will discuss today. Okay, understand the mindset of examiner. Understand the mindset of examiner. Okay, now third point, practice questions. Now when I say practice questions, is it like a normal practicing questions? No, the approach to practice questions is also entirely different. This is a strategy which I always recommend to my students for this chapter. Okay, and again I will recommend the same to you guys also. The practice questions which you have to do for this chapter is not like the other chapters of preparation of the financial statements, or section A question or section B question. Understand, in this chapter what you have to do is, there is a two-stage strategy you have to follow. Two-stage strategy. Stage 1, internship. Stage 2, okay, job. Now tell me, when you are doing internship, does anyone has any expectation from you, or you are there to learn? Tell me, when you are doing internship, anyone has any expectations from you? No, they all knows that you are just here to learn things, right? Similarly, when you are in stage 1, don't have any expectation from yourself. Okay, just understand that you are here to learn. Now what you have to do in the stage 1 internship stage, what you have to do here is, okay, solve one question of each type. Solve one question of each type. How? Using this strategy. Strategy is, first you have to read the question Then you have to read the requirement. Okay, then you have to read the answer. Then you have to read the answer, or rather I will say, okay, analyze the ratios. Analyze ratios. Okay, now fourth is read the answer. Read the answer. Now what you will do when you read the answer? Read the answer to understand how the examiner has linked ratios to scenarios given in question. Okay, then fifth is write your answer. Write answer. Okay, or practice your answer. Okay, now once you have written the answer, then again compare your answer. Compare your answer. Okay, and identify where you lacked. Okay, and then you have to rectify it. So this is stage number 1, where you have to solve one question of each type, but don't keep any expectation from yourself. Don't keep any expectation from yourself. Just read the question, read the requirement, do your analysis. Then again, don't start writing the answer. Rather, read the answer with an understanding that how this ratio analysis has been linked to the specific scenarios given in the answer. Now once you have understood it, start writing your own answer. Okay, once you have written the answer, definitely it will not be perfect one, because you are just in the stage of intensive. So compare your answer with the ideal answer. Okay, suggested answer. Now when you're comparing, definitely you will find lot of mistakes in your answer. So rectify those errors and make it as a learning points. Okay, this is stage number 1. Come on guys, show me, is it clear everyone till here? Come on guys, tell me. Now, stage 2 is job. Now, when you are doing job, everyone will have expectations from you. Now, and you are also required to have expectations from yourself. Now, what you have to do in this case is step step number 1. Step number 1. First, again, start with read the question. Then again, read the requirement. Then analyze the ratios. Okay, write your answer. Now, what is the difference? See here. So, step 1, 2, 3 is fine. But here, first I told first read and then write. Now, here I am saying write your answer first. Okay. Then compare. And then you have to rectify. and then you have to rectify. Guys, still you guys, all of you have time, still all of you have time, and understand that interpretation of financial statements is a question that will be mandatorily asked in all the papers, all attempts. Okay, so don't think that interpretation might not come in the exam. It will definitely come in the exam. Definitely, come what come may, interpretation will definitely come in the exam. So there is no point, there is no option of you leaving this question in the exam. Okay, so definitely it will come in the exam, so you have to prepare for it. Okay, you have to prepare for it, and trust me guys, this is an area where you can score a good number of marks. Okay, out of 20, try to score at least 15. Okay, at least 15, and trust me, you can do that. Trust me, you can do that. Okay, but you are just required to follow this study strategy, and you are done, okay. To follow this study strategy from now also, if you start, just try to solve 3 questions per day, and I can guarantee it is done. Just 3 questions per day. So if you solve 3 questions per day within 2 days, within the next 2 days, definitely you will be done in the done with the stage number 1 internship. Now for the next 4 or 5 days, you are just required to follow stage number 2. That's all done, right? So please give appropriate time to this chapter, because definitely it will come in the exam for the 20 marks, and 20 marks is quite a lot. Okay, now, so this is the study strategy you have to follow. Okay, now one thing I will tell you, understand the ratios. I have already explained the ratios in the previous sessions. Okay, the link for that also will be given in the description box. Okay, so understand the ratios also I have explained in brief, not in much detail. In brief, I have discussed in one of the revision session. With the link for that will be given in the description box. You can go and watch that out. Okay, now understand the mindset of examiner. I will discuss it right now. Okay, practice approach. I have discussed questions. One question I will practice with you today also. Now understand the mindset of the examiner, what the examiner is looking for, Okay, now let us discuss that. Before we move ahead, guys, who are watching the session, if you have not liked the video, all of you, come on, please like the video. Okay, please hit the like button. Now what the examiner is looking for. What happens, I will first tell you what student does, and then I will tell you what the examiner wants. Okay, now what student does is when a question from ratio analysis comes in the exam, or when a question from interpretation of financial statements comes in the exam, what the student tries to do there is basically they try to write that this ratio has increased, this ratio has decreased, this ratio has increased, and the performance, this indicates that the entity is performing good. This ratio has decreased, this indicates that the entity has performed not performed in a better manner. Okay, entity could have performed better. This is not the way you have to write your answer. Okay, so what we will do, first we will read exactly what the examiner wants, and then I will try to summarize things for you. Okay, candidates are required to combine the information in the scenario, this point is very important, guys. Candidates are required to combine the information in the scenario with the numbers that they have been given to produce a coherent understanding of the business and why items have changed, why the ratio have increased or decreased. Now what happens, see, this is what I was talking about here. Okay, read the answer to understand how the examiner has linked the ratios to the scenarios given in the question, how they have linked, and this is the most important point, guys, and this is where a student lacks in the exam, and I can say with the numbers, around 80% students lack in this area. Around 80% students who don't perform well in the exams for in this question particularly lack in this area itself. See, understand, in this chapter, in this question of ratio analysis, you will be asked to calculate ratios. You will be asked to give your analysis. Calculation of ratios, everyone does it correctly. calculation of ratios, everyone does it correctly, but where a student lacks is the analysis. Why? Because analysis requires linking the increase or decrease of the ratio with the scenario given in the question. Okay, now how to link that scenario, I will discuss that also, don't worry. This is the specific skill that prepares candidates for the SBR. That's a wonderful point which the examining team is saying. See why? Because understand, all of us knows that FR paper is more of a number crunching paper and SBR paper is more of a analysis paper, right? So this is the this question is a bridge between FR and SBR. Why? Because this question has number crunching also, which pertains to FR, has analysis also, which pertains to SBR, right? So this question tries to make you ready for the SBR paper. The answers needs to give key reasons for the movements rather than simply stating that the performance has improved because sales or profits have increased. The examining team is saying that we need the key reasons why it has increased or why it has decreased, rather than just saying in a generic statement. Don't give generic statements. Do not try to give any generic statements in the answer, rather try to give specific points. Think of how a business is analyzed. Right now I was mentioning that think like a director of the company, think like you are the owner of a company. Okay, so that's what it's saying. Think of how a business is analyzed in the real world. Now it is trying to give you an example also. If you are looking at the financial statements of a large company, say Netflix, I believe all of us knows Netflix. Come on guys, tell me, all of us knows Netflix, right? Now understand, the examining team says example also and noted that revenue has increased year on year, meaning thereby in the previous year the revenue of Netflix was $10,000. Okay, $10,000 million dollars. Okay, let's suppose revenue of Netflix was revenue in previous year was dollar 10,000 million. Okay, and in the current year is dollar 12,000 million, right? So definitely the revenue has increased. Now what does it signify? So normal student will write the company's performance has increased, but a strong student will write the answer in this manner. Okay, he will write the revenue of Netflix comes from subscriber base, right? And the Netflix charges a fixed amount per month to each of its subscribers. Now revenue can increase either because of two reasons. Okay, one is due to the subscriber base has increased or the subscription fees has increased. Okay, now if the number of subscribers has increased, then we can say yes, the performance has increased. Okay, the company is growing, but if the number of subscribers has decreased during the current year as compared to previous year, but the company has increased the subscription fees per subscriber, which leads to increase of the total revenue, then it might not be a correct parameter. Then we cannot say the company is growing. No. Why? Because your subscriber base is decreasing day by day. Even if you are increasing fees, but your subscriber base is decreasing. So this is not a growth factor for the company, even if the company's revenue has increased overall. Okay, so now what the standard says, that what this article says, that you should not simply state that this was a good performance. You should talk about the reasons why the revenue is increased. For example, increased subscriber numbers or expansion into new territories. You could talk about successful programs, recent film developments, or significant promotional offers. All of these would contribute to the underlying increase in revenue and should be discussed. So the standard or the technical article or the examining team wants you to discuss the specific points and not the generic points. Okay, And the one more thing here, the specific points will be given in the question itself. You just need to be mindful. You just need to be mindful. Okay, you just need to be mindful, and that's the reason why I always recommend to my students that a day before the exam, keep your mind calm, because if you keep your mind calm, it will operate effectively and efficiently in those 3 hours. Otherwise it will not operate with that high level of efficiency in the exam time. Okay, so keep your mind relaxed for at least 24 hours before the exam. Don't take unnecessary pressure. Now it says, similarly in FR exam, candidates must use the scenario. Okay. Now the exam will give you information in the question which is there to support you. Just now I mentioned the scenarios will be given in the question. You just need to find it out. Okay. Just as an analyst commenting on the increased Netflix revenue would be expected to mention the factors outlined earlier, a candidate is expected to use the information given in the question to explain the changes in the performance or the position. Any candidate who does not use the information is likely to score poorly. If you are not using the information, you will score poorly in the exam. Now, a candidate's answer must be balanced. Okay, often the requirement may have the separate elements to it, such as commenting on the performance and the position and asking for a further information. It is vital for the candidates to attempt all of the requirements. Now, okay, fine, this is already discussed, so I'm not discussing it again. But now let me give you few points, takeaways. First, link ratios to scenario given in the question. You are not required to think out of the box. You are just required to think within the question. Okay. Second, okay, think like owner of company. Third, try to give what if analysis. Now, what is the meaning of what if analysis? I will give you an example. What if analysis. Now, understand. Let's suppose you are comparing two companies. Listen to this example. Please listen to this example. Okay, this is an example where you will find multiple places. Okay, so please listen to this example appropriately. Okay, now let's suppose there are two companies, A and B. I'm giving an example. Okay, A and B. You are comparing these two companies. Now, A has a return on capital employed of 26% and B has a return on capital employed of 28%. Okay, clear? Now, A has a policy of revaluing its non-current assets. Okay, but it has a policy to keep at cost model, right? So now what happens when you compare ROCE of two companies? You will say that ROCE of B is better than A and B is performing better than A. Yes or no? Tell me. Come on, guys. Tell me. Respond, please. When we see prima facie, apparently it appears that B is performing better than A. I will write also. Prima facie it appears that B performs better than A, right? Right, because B's ROC is 28 and A is 26. Now tell me, what is the formula for ROC? What is the formula for ROC? What is the formula for ROC? Tell me, guys, come on. What is the formula for ROCE? It is operating profit divided by capital employed. Right, now tell me, if this revaluation reserve, will increase the capital employed. Not will, it increases the capital employed. Tell me yes or no. Revaluation reserve increases the capital employed. Tell me yes or no. Increases capital employed. Tell me yes or no. So now, do you think that these two ROC are comparable? No. So what if ROCE of A, if no revaluation of assets of A, now meaning thereby your capital employed will decrease. Okay, capital employed of A will decrease, meaning thereby ROCE will increase. Are you able to understand this point? Are you able to understand this point? Are you able to understand this point? If I remove the revaluation reserve, my return on capital employed will increase. Why? Because my denominator will decrease. When my denominator will decrease, okay, numerator remaining constant, my denominator will decrease. If that happens, the ratio overall increases, right? Now what happens? Let's suppose the ratio revised ROCE for A is 31.5%. Now tell me who performs better. A performs better than B. So this is called as what if analysis. What a student generally does in the exam is they compare two ROC and say that ROC of A is lower and hence B performs better than A. But this analysis is also required in the exam. Okay. Now it might be the case that there is a gain on disposal of asset. Okay, which is a one time. Okay. So again, see, or basically what I am trying to say here is there can be the case that the two companies are not comparable. So first you have to make them comparable and then give your analysis. Okay, so you have to do what if analysis. Okay, you have to do what if analysis. And if a student does what if analysis, the examining team gets highly impressed by that student. Okay, so you have to do what if analysis. Now it doesn't mean that you will purposely find what if analysis in the exam. No, if there is a possibility of writing a what if analysis in the exam, do write it. Otherwise, don't write it purposely. Okay, I hope it is clear to everyone. Till here. Now, examining team also suggests key weaknesses. Okay, key weakness in the exam paper. Lack of depth, lack of use of scenario, lack of workings. Three mistakes done by the students in the exam, and if you work on these, definitely you will score wonderfully in these questions. Now it says that candidates often identify movements in accounting numbers without ever attempting to discuss the reasons. So standard or the technical article or the examining team wants us to discuss the reasons why there has been a movement. Candidates sometimes comment that profitability has increased Profitability has increased because the profit margins have improved. This is not an appropriate reason. You have to link this to now and tell me why this has decreased. We understand that profitability has increased, then that means that profit margins have increased. But rather than saying this, you have to say why it has increased or why it has decreased. You have to comment on that. Okay, this is too brief and does not give any meaningful analysis, which should always seek to explain the underlying reason. Reason is important. Reason is important. Use of scenario. Too many candidates attempt to rote learn what ratios could mean and apply them to the numbers without any consideration for the information provided. Okay, one example. Okay, now it is giving example also, is where an exam question dealt with a company that had acquired a new subsidiary and formed a group during the year. This means that the company has presented were presented with console FS for the current year and FS for single entity for the previous year. Now what is it trying to say? The company was a single entity here. It acquired a subsidiary here. So it becomes a console here. It becomes a group here. It becomes a group here. It becomes a group here. Now, this means the candidates were presented with the console FS for the current year and the FS for a single entity for the previous year. A significant number of candidates attempted to answer the question without mentioning the acquisition or that they were comparing finances that were not completely comparable. Now tell me, do you think these two numbers are comparable? Do you think these two numbers are comparable? Tell me guys, do you think these two numbers are comparable? No. So what you have to do, you might be required to do a what if analysis. So first you have to compare these two, but then analyze the ratio. Then you have to say that since they are not comparable, so let's remove the effect of the acquisition of a subsidiary and then compare it off. Okay, and then compare it off. Then you have to basically make them comparable and then compare and then give your analysis. Okay, so this is what is called as linking with the scenario. Okay, now calculation without workings. Okay, now what happens when the question asks you to calculate ratios? What a student does, I will tell you. Let's suppose you are calculating return on capital employed and you know your operating profit margin is $3,600. So what you do, you take your calculator, 3,600 divided by, okay, 3,600 divided by, and your operating profit margin is, let's suppose, your capital employed is, let's suppose, 12,000. So you write 3,600 divided by 12,000 is 30%, and in the answer you just write ROCE is 30%. See, if it is correct, you will get the marks, but if it is wrong, it will fetch you 0 marks. I'll tell you why. This rule is called as own figure rule. Let's suppose you are required to write ROCE. The correct answer of it is 30%. Correct answer is 30%, but you just wrote 32% in the exam, so it is wrong. And this is for 2 marks, so you will get 0 marks. But in the exam, you wrote 3,200 divided by 12,000. Okay, divided by 12,000 is equals to 3,200 divided by 12,000 is equals to 26.67%. Now tell me, is this ratio correct? No, this ratio is still wrong, and this operating profit margin is wrong, but capital employed is correct. Right? Now you will get the marks for that. Now understand. Further one more thing. Let's suppose this operating profit you have calculated here. 3,200. Okay. Let's suppose the examiner already deducted marks for this here, and now you are again using 3,200 here and calculating this 26.67%, though it is wrong, but you will fetch full marks for this. Why? Because the examining team says that since I have already deducted the marks for operating profit margin, I am not deducting marks for that. Now I am assessing ROC, and you have calculated ROC correctly, though the carry forwarded operating profit was wrong, for which I have already deducted marks. So I am not going to deduct marks further for that. I'm not going to deduct marks further for that. Okay, so they will give you full marks, and that's the reason why I always recommend to my students that please write things in detail. Give the formula in the answer. Okay, give your workings. So if you give your workings, there are high chances of scoring higher number of marks. Okay, so give your workings, give your workings. Is it clear, everyone? Is it clear, everyone? And this rule is called as own figure rule. This rule is called as own figure rule. I hope it is clear to everyone till here. I hope it is clear to everyone till here. Come on, guys, tell me. Now, the main reasons the analysis questions do not score high marks, do not score high marks is because of candidate do not provide workings, they do not provide the link with the scenarios, but do not provide an explanation of why that might be a case, do not provide the scenario, do not link with the scenario. The same three reasons, okay, basically workings. Now, so what I will do is I will add in my key takeaways. Point number 3, point number 4, 5, 6. Point number 4, point number 5, point number 6. Okay, give workings for all your calculations now. Further, link the ratio analysis with scenario and give specific reasons, or not give, provide specific reasons for increase or decrease of ratios or numbers. So this is the 6 points which you have to follow to succeed in the question of ratio analysis or interpretation of financial statements. Okay, these are the 6 points. These are the 6 points which you have to give. Okay, now link ratios. Okay, I have already written that, so I will not write it again. So these are the 5 points, I can say, not 6. These are the 5 points which you have to take care. These are the 5 points which you have to take care in the exam. That's all. Is it clear, everyone? Is it clear, everyone? This is what is the mindset of the exam. Can we get the access to this sheet after the definitely yes, Ruti. I will send this file in the group. Okay, I will send this file in the WhatsApp group. In this class, when you are in this class, just try to listen, don't try to write anything. Okay, because I will be sharing this file with all of you in the WhatsApp group right after the class. So focus on listening to what I'm saying rather than writing what I'm writing. Okay, that will be a more effective way of learning in the today's session. Is it clear, everyone? Anyone has any queries? If you have any queries, guys, please discuss that with me. That's the whole intent of taking a live session. Tell me if you have any queries. Come on, guys. Done. So let's take up a question now. So as I promised that I will take up a question also. So here I am taking a question on type 2 bun company. I'm taking a question on type 2 bun company. Okay, I'm taking question on type 2 bun company. So let's read the question, try to understand the question and analyze the question. Will I draft the answer here? No, but I will give you the pointers. I will give you the pointers. I'm not going to draft the answer. I will give you the pointers. But what you have to do right after the class, right after the class, okay, right after the class, you have to solve this question on your own. You have to solve this question on your own. Okay, now Bun Company is a bakery which also owns two shops or cafes. Okay, Sakshi has a query. Sir, do we need to provide with conclusion in the answer? Yes, Sakshi, conclusion is mandatory. Conclusion is mandatory. Okay, because without conclusion, your answer does not make any meaningful sense. Okay, basically understand, whenever you are interpreting a financial statements, there is one objective behind that. Okay, and your conclusion should be answering to that objective. I will tell you what is the rationale behind conclusion, and I am discussing this question also, and I will show it also. So basically, whenever you read any question, there will be a problem statement given in the question. The problem statement will be, the directors of the company thinks that the profitability is decreasing year on year. Okay, so please assess. Now in the conclusion, you have to assess whether the profitability is actually decreasing or not year to year. Okay, giving some of the parameters which you have analyzed in the question, and conclude with whether the thinking of the director is correct or not. Okay, like now the problem statement can be, the company has not outperformed the sector. Okay, now this is the one of the problem statement of the director. Now you have to analyze it and then conclude whether the company is actually outperformed or not. Okay, so basically the conclusion should be a answer. The conclusion should be an answer to the problem statement identified in the question or the requirement. Is it clear, Sakshi? Is it clear, Sakshi? So Bun Company is a bakery which also owns two shops or cafes. Over the last 2 years, the company has experienced declining profitability due to increased competition, and so the directors wish to investigate if this is a sector-wide problem. Consequently, they have acquired equivalent ratios for the sector, some of which has been reproduced below. Now, further it says that, so this is the problem statement. See, this is the problem statement, Sakshi. The company has experienced declining profitability due to increased competition, and so the directors wish to investigate if this is sector-wide problem. Understanding, Sakshi? Basically, this is a problem statement. Now your conclusion should be answering to this problem statement. Okay, consequently, they have acquired equivalent ratios for the sector, some of which has been reproduced below. Okay, this is the sector averages given. The following information has been extracted from the draft financial statements of one company for the year ended 31st December 2007. Okay, so P&L is given, SOFP is given, and few adjustments are also given. Okay, so now let's read the adjustment. Okay, now adjustment is, in 20x6, Bun Company acquired a popular brand name. At 31st December 20x7, the brand name represented 20% of the non-current assets. It represented 20% of non-current assets. The remaining 80% of the non-current assets comprises of the property from which Bun Company operates its bakery and shops. This property is owned by Bun Company and has no directly associated finance. The property was revalued in 20x4. Just the example I gave, right? Revalued. So there will be challenge in calculating what? Return on capital employed. In the year ended 31st December 2007, Bun Company began offering discounted meal deals to the customer. Bun Company hoped this strategy would help to reduce perishable inventory and reduce inventory holding periods. Okay, fine. In January 2008, it was decided to discount some of the slow-moving seasonal inventory, which had a selling price of $1.5 million. Under the normal circumstances, these products have a gross profit margin of 20%. The inventory was sold in February 2008 for 50% of what it had cost to produce. The financial statements for the year ended 31st December 2007 were authorized for issue on 15th March 2008. Fine. This is the question. We have just read the question now. Let's read the requirement. Let's read the requirement. Adjust the information in note 3. Adjust the information in note 3. Okay, and calculate the 20x7 sector averages and equivalent ratios for Bun Company. Okay, now it is asking us to adjust this in the financial statements. If there is any adjustment, let's adjust that in the financial statements. Okay, and then calculate the ratios for this company. Okay, fine. So requirement number A. Let's try to answer that. Now, first point. Tell me, as per IAS 2, how is inventory valued? Inventory is valued at lower of cost or NRV. Right? Now, as per IAS 10, on events after reporting date, here I mentioned that, let's suppose this is 31st of December reporting date and this is 15th of March when the FS are approved. Events that occur here are called as events that happen here are called as events occurring after reporting date. Now these events can be adjusting and can be non-adjusting. My question is, see, standard says, this question clearly says that in January 2008, here the question says that here I have sold inventory at 50% of cost price. See, here it mentions that the inventory was sold in Feb, not January, Feb. Okay, inventory was sold in February for 50% of what it had cost Bun Company to produce. That is sold for 50% of cost. Now my question is this adjusting or non-adjusting? Tell me. You have to tell me, is this an adjusting event or a non-adjusting event? Is this an adjusting event or a non-adjusting event? Tell me, guys, come on. Adjusting or non-adjusting? Come on, guys, tell me. Sakshi is saying adjusting. What about others? Maria is saying adjusting. Others, can you tell me the reason why you are telling adjusting? Because Dhruti is also mentioning adjusting. Very good. So understand, because we have to value here. So event basically what happens, the event existed here, but we got the confirmation here, and hence it becomes adjusting, So what we will do, we will adjust it. Okay, we'll adjust it. So how to adjust? This is an adjusting event. An adjusting event. So you will write, since this sale of inventory is an adjusting event, The journal entry to be passed is provision for inventory account debit to inventory. Provision for inventory account debit to inventory. Now, what is the provision required? So let's calculate that. So tell me what is the sale price? What is the sale price? It is given, right? Selling price is 1.5 million. Sale price is 1.5 million. And now gross profit margin is 20%. So it is 0.3 million. So what is the cost price? What is the cost price? 1.2 million. Now this is the cost price. Now it is sold at 50% of cost. It is sold at 50% of cost, that is 0.6 million. Now that is what is the cost and what is the net realizable value. So the cost is 1.2 million and sold at this value, so it is 0.6 million. So inventory should be valued at this one, and hence a provision is required of 0.6 million. We will reduce the inventory by 0.6 million. 0.6 million. Now comes the question, what is the impact? What is the impact? In P and L and statement of financial position. In P and L, what is the impact? Tell me. In P and L, what is the impact? Tell me. In P and L, what is the impact? So cost of sales will increase. Then operating profit will decrease. What else? What else? Cost of sales will increase, operating profit will reduce, and gross profit will also reduce. Gross profit will also reduce. Gross profit will also reduce. Operating profit will also reduce. Further, net profit is also there. Profit from operations. That's all. Now, in SOFP, what will happen? In SOFP, what will happen? Inventory will decrease and retained earnings will decrease. Okay. As a result, capital employed will also decrease, right? Because capital employed includes retained earnings. Okay. Now, so what is the amount? By what amount? So it will decrease by, see, this figure is in thousands or in millions. It is in thousands. It is in thousands. So I'm writing this figure in thousands. Okay. I'm writing this figures in thousands. Okay. In thousands. So it is by 600, by 600, by 600, by 600, by 600, by 600. Okay. Now this is what happens. Now, can you please calculate the revised ratios? Can you please calculate the revised ratios for one company? Okay. Now, so we have to calculate which ratios, tell me. So we have to calculate these ratios: return on capital employed, operating profit margin, net assets turnover, inventory holding, and debt to equity. 1, 2, 3, 4, 5 ratios. So let's write this name. Return on capital employed, ROCE, we have to calculate. We have to calculate operating profit margin. Okay, operating profit margin. We have to calculate inventory holding period. Then what? Net assets turnover and debt to equity. Can you please calculate these ratios, all of you? Can you please calculate these ratios, all of you? Come on, guys, tell me. Please calculate the ratios. uh, ROCE is operating profit divided by capital employed. So let's calculate the operating profit is, see, operating profit is 13160. 13160. It is 13160. It will get reduced by 600 divided by capital employed. What is the meaning? What is the capital employed? Tell me what is the capital employed. Capital employed is total equity plus non-current liabilities. That is 32880. 32880 plus 14,400 minus 600. Okay, so what is the figure that comes up? 13160 minus 600. Okay, then 32880 minus 600 plus 14,400. Okay, is 26.9 percentage. Now operating profit margin is again, here it was 12560. This is operating profit divided by revenue. Divided by revenue. What is the figure of revenue? Any impact on revenue? No. Any impact on revenue? No. 100,800. 100,800. So it's equals to 12560 divided by 100,800 is 12.5 percentage. Inventory holding period is inventory is 3960. And what is the cost of sales? Cost of sales is 70,600. 70,600 divided by 336. Hmm. Provision is a current liability. Yes, Shakshi, provision is a current liability. Very good. I understand that point. So if you are thinking that what is the impact of current liability in the return of capital on capital employed, so what I'm trying to say here is this provision will definitely impact my profitability. Profitability will go to retained earnings, right? And hence retained earnings will impact the capital employed. Okay, so by retained earnings it impacts my capital employed, not through as a current liability. Okay, so I believe these ratios are clear to everyone. Can you please calculate the ratios? Can you please calculate the ratios and tell me the figures? I believe the question is also already in front of you guys. Please calculate the ratios, all of you. Come on, guys. Waiting for you guys to respond. What is the inventory holding period? This is what is the inventory? 3960. Inventory is 3960 if I'm not wrong. Inventory is 3960 minus 600 right, divided by the cost of sale is 70,000 plus 600, it will increase, right? Now multiplied by 365 days is equals to 3360 divided by 70,600 into 365 is 17.4. So means inventory, a single inventory is held for 17.4 days. Net assets turnover. Tell me net assets turnover. What is the this one formula? What is the ratio for this? Dhruti, no, it's not 70,000, 70,600. See, understand why? See, the cost of sales is given 70,000 here. Cost of sales is 70,000 here. But due to that provision, we will increase the cost of sales, right? The provision will increase the cost of sales, right? So that's the reason why we increase here cost of sales. The provision will increase the cost of sales. This is an important point here again, which you can make a mistake. So please highlight it here. Now net assets turnover. Tell me what is the ratio? Come on, guys, tell me what is the ratio for net assets turnover. So what is the revenue? Revenue we wrote somewhere. This one is a revenue 1,00800 divided by what is the capital employed? We calculate here. This is the capital employed. So 32880 plus 14,400 minus 600 is 46680. Is equals to 1,00800 divided by 46680 is 2.16 days. 2.16 times. Now debt to equity. So what is my debt? What is my debt? My debt is 14,400. Equity is 32880 minus 600 into 100 is equals to 14,400 divided by 32280 into 100 is 44.6%. Okay, so this is the ratio. Now what we have to do, we have to compare this with the sector. So what I'll do, I'll write in the bracket for the sector. I will write in the bracket for the sector. So the sector ROCE is 18.6%. Is 18.6%. Okay, sector operating profit is 8.6. Operating profit margin is 8.6. Sector net assets is 2.01 and 4 days. 2.01 net assets turnover is Debt to equity is 80%. Now, so this is versus Bun company versus sector. Bun company versus sector. Now, this completes our requirement number A. Adjust the information in note number 3 and calculate the ratios. We are done with that. And I'll tell you one fun fact. You can score 7 out of 7 this one. You can score 7 out of 7 in this one. Point number B. This is the important part of this question. Assess the financial performance means P&L and position means SOFP okay, of one company for the year in 31st December 2007 in comparison with the sector average ratios. So basically it says that compare these ratios with the sector, compare these ratios with the sector. Now, so first of all we will compare, first of all point number B, right here point number B, we'll write about financial performance, means we'll write about the profitability. Now when we talk, see, and always understand, always come from top and then go down, always come from the top and then go down. So now tell me, what is the topmost line of performance? Okay, Rinki has a very good question. Rinki says that the question does not state that you have to consider the impact of point number A, basically the adjustment number 3, in calculating the in comparing with this sector. So Rinki, understand, if you have calculated the ratio, if you have calculated the ratios using the revised figures, definitely we will use that itself. Why? Understand, this is an adjustment that has to be done as per the IAS, meaning thereby if we have not done this adjustment, this FS is not correct, this is not comparable. So first of all we are making this adjustment, and making the FS in line with the IAS, okay, in line with the IAS, and then we can compare it off, okay, and then we can compare it off. Now understand, all of you, Rinki and all of you, okay, there are two type of adjustments. One, to make the FS in line with the IAS, okay, in line with the IAS. Another, to make the accounting policies similar. Understand guys, come on. So when we say that we are doing this adjustment to bring the FS in line with the IAS, so here this is mandatory, without which we will not compare also, but if it is about accounting policy, then comes the question of what if analysis, meaning thereby first we'll write that this is the ratio of this company, this company has performed better, but since there is a difference in accounting policy, so once if we make the accounting policy similar, now this is the ratio, and this is the comparison. Are you understanding the comparison, how you have to do it? Rinki, does this answer your query? Now, financial performance. So what I was saying, that what is the top line, what is the topmost line in the financial performance? Tell me, what is the topmost line? Sakshi and Maria is saying revenue. Very good. So the examining team recommends you to start with revenue. But now tell me, do we have the revenue of the sector? So can we compare revenue? Can we compare with revenue? Can we start with revenue here? No. Now the second line is what? Gross profit margin. Do we have the gross profit margin of the sector? Tell me, do we have the gross profit margin of the sector? Come on guys, tell me. Dhruti, Maria, Shakshi, Rinki, Gaurav. Vincent, Shweta, Shivani. Do we have the gross profit margin of the sector? No. Since data is not available for a sector, means thereby no comment. Do we need to write this statement in the exam? No. Do we need to write this statement in the exam? No. But I am explaining why I am doing like this. Okay, I am explaining why I am doing like this. Okay, now third point. Third point is return on capital employed. So let's comment on this one. Let's comment on this one. So how will we comment on return on capital employed? Point number 1. I am explaining in a pointers form, but you are required to write in the exam in paragraph form. Okay, but because I am explaining it to you, so in pointer forms, it is easy for me to explain. It will be easy for me to explain in the pointer form. Now tell me, first point, what is the ROCE of Bun? Bun has an ROCE of 26.9% if I am not wrong, 26.9%, versus sector has an ROCE of 18.6%, meaning thereby Bun has outperformed sector. Okay, but however there is a difference in accounting policy. Okay, now what is the difference in accounting policy? That is, Bun revalues its property, okay, which other companies might not be doing. Okay, now if we remove impact of revaluation, tell me what will happen if we remove the impact of revaluation. Tell me, Bun's ROCE will increase or decrease? Bun's ROCE will increase or decrease? If we remove the impact of revaluation surplus, Bun's ROCE will increase or decrease? Come on guys, tell me. Bun's ROCE will increase or decrease? Why decrease, Sakshi? If you are removing the revaluation surplus, meaning thereby capital employed will decrease. Capital employed being denominator, if it decreases, the ROCE as a overall will increase, right? ROCE overall will increase. See here, revised ROCE is equals to operating profit by capital employed. Operating profit is 13160 minus 600, that is 12560, divided by capital employed is how much? 32880 plus 14400 minus 600 is 46680, is 46680, but I am adjusting this for the impact of revaluation. I am removing the revaluation impact. What is the revaluation surplus? Let's come to the question. So the revaluation surplus is how much? $5,400 minus 5,400. So what happens? The revised ROCE is equals to 46880 minus 5,400. It increases to 46680 minus 5,400, 41280. 30.43%. 30.4%. 30.4%. Now, what does it mean now? What does it mean that Bun ROCE further increases. Further increases. Okay, it further increases, meaning thereby it has Bun has outperformed the sector. Outperformed the sector. Right? This is the first point which you have to write. Second point. Now tell me, what about asset turnover ratio? Okay, or basically before writing that, let me give you one logic also. ROCE is equals to operating profit divided by capital employed. This can also be written like this: operating profit multiplied by 1 by capital employed. Okay, now here I can write revenue. Right? So can I write like this? So revenue and revenue will get cancelled again. I will get operating profit by capital employed. Now this is called as operating profit margin, and this is called as assets turnover ratio. So now you can say that ROCE is a factor of operating profit margin and assets turnover ratio. Now what is happening? ROCE is increasing. This increase is due to increase in operating profit margin. See, operating profit margin has outperformed, the Bun has outperformed the sector in terms of operating profit margin also. So you have to give this comparison again here. Okay. Now, so ATO, now assets turnover, I think there was a very little difference. Assets turnover, so 2.0, 2.16 and 2.01, there is no much difference. Okay, so I write here assets turnover has little difference, hence it is operating profit margin, which has contributed significantly to higher ROCE of Bun. This is called as linking to the scenario. Okay, this is called as linking to the scenario. Now in the question, one more point was given. In the year in 31st December 2007, Bun Company began offering discounted meals to its customers. Bun Company hoped this strategy would reduce perishable inventory to reduce inventory holding period. Now tell me, what will happen if I give free or discounted meals? If I give discounted meals, definitely the price will reduce, the profitability will reduce, but don't you think the volume will increase? Now don't you think, since I am already outperforming the sector, meaning thereby the profit margin that I have is significant. So even if the profit margin decreases by a certain percentage and I increase the volume will compensate for the decrease in the price. The volume will compensate for the decrease in the price or the discounts offered to the customers. Do you understand this point? Okay, so it says Bun Company plans discounted meals okay, which seems to be a good decision, due to two reasons. Reason number one, volume will increase. Though it will reduce profitability, profitability in terms of in percentage, but in absolute profitability will increase. I will show this with the help of an example. You are not required to write this example in the exam, but I will explain this with the help of an example. Okay, now let's suppose the price is $100 per unit, okay, and number of customers that I serve is, let's suppose, 1000 customers. Okay, so tell me what is my okay, price, or I write here not price, I will write profit. Okay, so now tell me what is the total profit. What is my total profit? Total profit is you can say 100,000, right? Total profit is 100,000. Now if I give discount, so what happens? If I give discount, I make the price as $80 per unit. Okay, now but the number of customers increased to 1500. So what happens? Just multiply 1500 multiplied by 80 is 120,000. So this is what I'm trying to say. Though the profitability margin gets reduced, but in absolute figures, the amount of profit will increase. Now, can you please read this point and tell me, is it clear, everyone? Though you are not required to give this example in the exam, you are just required to write this point, not required to give this example. This example I've given just for your understanding. Come on, guys, tell me, is it clear, everyone, till here? I need response from all of you guys. Come on, tell me, is it clear, everyone? Is it clear, everyone? Now further, in point number one, it mentions that the property used for bakery is owned by one company. Property is owned by one company. Okay, now its competitors might have taken this property on rent. Now what happens? If they are taken it in rent, definitely they will record a rent expense, which would have decreased their operating profit margin, right? But since in our FS, since one company has owned it, there is no concept of rent, and hence the operating profit margin is improved. Operating profit margin is decreased for the competitors, for the sector. Clear, everyone? So these are the points which you have to write. See how many points? One in ROC we write as good as 2 points. Then in this one we write 1 to 3 points, and again 4 points. 4 to 6 points we have written in financial performance. In financial performance we have written as good as 6 points. I hope it is clear to everyone till here. So what was total marks? 10. So we have already written 6 points. So now financial performance. We have to talk about financial position. Now we'll talk about financial position. Now we'll talk about financial position. Financial position. Now in financial position, what we will write here? First point. Inventory holding period. Okay, what is the inventory holding period? Tell me. 17.4 days versus 4 days. A positive figure or a negative figure? Negative figure. Financial position is 17.4 days versus 4 days for the sector. Now, and understand this bun company is in the nature of restaurant business, bakery business. And if you understand bakery business, the inventory is perishable. The bread, the butter, the cream, all these are perishable. They have a limited shelf life. Might be 3-4 days. And if the inventory is kept for 17.4 days, there are high chances that it's a loss, and this is substantiated by the fact that we have booked a provision on inventory in the current year also, right? So this is a negative indicator for perishable industry. Right? But now link this with the scenario. But bun company offering discounted meals will help to reduce inventory holding period. Is it clear, everyone? This is first point. Second point, debt equity ratio. Now, what is the debt equity ratio? It is 44.6 if I am not wrong. 44.6 versus 80%. 44.6% is for the bun company and 80% is for the sector. Okay. Now, why? Basically, bun company has purchased property without any associated finance. See here, this point is written here. And has no directly associated finance. This property is owned and has no associated finance, means I have purchased this property using my own funds. I have not taken any loan from the market. Right? So that's why my debt equity ratio is lower. So this is how you have to explain things. A weak student will write debt equity ratio of one company is lower than the debt equity ratio of the sector, and this is a good indicator. But a strong student will write answer like this: the debt equity ratio of one company is 44.6% as compared to 80% for the sector company. This is due to the reason because one company has purchased all its property without any associated finance. Okay. Now further it will write, you can also write that one company has taken a loan at interest cost, at interest rate of, at interest rate of, tell me what is the interest rate at which the loan was taken? Interest rate at which loan was taken, tell me. The loan was taken at 10%. 10%. Interest rate of 10%. Now tell me, what does ROCE represents? What does ROCE represents? What does ROCE represents? Means for each dollar invested in the business, what is the return that I am generating? What is the return that I am generating? Is equals to 26.9%. Means for each dollar invested, in the business, I am generating 26.9%. Now for, if I have taken a loan of, if I have taken a loan of 14,400, if I have taken a loan of 14,400, tell me what is the return that I have generated? What is the return that I have generated? 14,400 into 0.269. 14,400 into 0.269 is equals to 3874. Now, what is the interest that I have paid? 10%, that is 1440. That is 2434 is the profit that I have generated using this loan. I took this loan of $10,000, right? $14,400 at an interest cost of 10%, right? I had to pay 1440, but I generated a profit of this much, right? So ultimately giving me a return of this much, and hence taking this loan is beneficial. I am availing the benefits of leverage. I am availing the benefits of leverage. So understand, till the time interest is lower than ROCE, loans are better. Debt is good. Debt is good. Debt is good. You can write here. It generates wealth creation for equity. You are generating the wealth for your equity. Okay. Now, this is what you can write in financial performance, I believe. Now, you have to give a conclusion. Now, you have to give a conclusion. In the conclusion, basically, you have to write everything. Basically, what was the problem statement? Tell me, what was the problem statement? What was the problem statement? The problem statement was the company has experienced declining profitability due to increased competition, and so the directors wish to investigate it is a sector-wide problem. Okay. Now, the problem was declining profitability. Okay. Now you have to say the one has outperformed the sector. Okay. And okay, outperform the sector. Why? Due to multiple reasons. Okay. Okay. Purchased property. Okay. No associated finance. No associated finance. Okay. Then these are the positive points. Okay. These are the positive points. High profit margins. Negative points. Negative points are high inventory holding period. But when you are writing a negative point, you have to give the solution also for that. So which will be resolved by discounted meals to some extent. Not fully, but to some extent it will be resolved. Discounted meals. To some extent it will be resolved. So this is how you have to write your answer. So this completes our part B as well. This completes our part B as well. I believe you have understood how exactly to write the answer. I believe you have understood how exactly to write the answer. Now the third point. Explain three possible limitations of comparison between one company and sector averages. Now this is the theoretical point. It says that point number C, it says that we have compared one versus sector, but you have to write there are three limitations why you cannot compare. Three limitations why you cannot compare one with the sector. Now understand, one company and sector company can have different accounting policies, and we saw also that basically it is keeping under revaluation model, and the sector might not keep under revaluation model, so it makes them uncomparable. Different accounting year end, okay, or accounting periods, meaning thereby one company might have a financial year ending from 1st January ending on 31st December, but sector might have from April to March or June to June. Okay, basically it can have different accounting period. Okay, so it will make them not comparable. It will make them not comparable. Now further you can write here, property can be owned or rented. Then fourth, the definition of ratios can be different for different, because there is no governing body for ratios, there is no governing law or standard on ratios, so the definition of ratios can be different for different companies in the sector. Okay, definition of ratios can be different. So this is what is point number C. Tell me guys, is it clear everyone? Is it clear everyone? Okay, so that's all for the day guys, that's all for the day. One more thing I will tell you, that I will be giving in the description box the videos for these three things: the question for mower, the one question for acquisition or disposal, and also I will be discuss this. I have given the understand the ratios, so three videos I have given, so do watch that also. It will give you complete understanding of the ratio analysis chapter. Okay, so that's all for the day guys. Thank you, bye bye. I hope this session helped you. If there is any further queries, or if you want me to make up any video, any other topic also, do let me know in the comment box. Okay, that's all for the day. Thank you, bye bye.